Welcome to Friday Takeaway. We are going to do currency-linked stocks this week, namely IHH Healthcare and MAHB. However, we need to start with Turkey. The US and Turkey have been locked in a stalemate over the fate of a middle-aged American pastor named Andrew Brunson, who has been accused of trying to overthrow the Turkish government. He was supposed to be freed and then wasn't, which resulted in the US imposing sanctions on two top Turkish officials. And when that didn't move Turkish President Erdogan, Trump doubled down on existing steel and aluminium tariffs. Erdogan didn't blink and instead slapped hefty tariffs of his own on US cars, alcohol and tobacco. So as a result, the lira plunged as investors split because they were already worried about weaknesses in the Turkish economy. But as a result, absolute carnage for the emerging markets as investors fled for safer shores. Both the ringgit and the KLCI suffered, with the ringgit falling to an 8-month low versus the USD, although it did recover a little on the back of the US and China preparing for another round of trade talks when Vice Commerce Minister Wang Shouwen travels to the US in late August. China has made it clear that it won't bow to any unilateral trade measures, but welcomes the dialogue. Back at home, today marks the 100th day of the Pakatan Harapan government, and of the promises it made, the main one that it kept was the abolishment of GST. We also saw more progress on the 1MDB scandal, which is always actually very, very comforting. Saying that, a Merdeka poll center did show that Malaysians are happy with their current government, but agrees that there is so much more to be done. DPM Wan Aziza said that it recognises it fell a little short of the target, mostly because it never realised how deep the problems were, but said it's working very hard to solve them. Aside from impacting the ringgit, the Turkish Lira tailspin also affected companies that have interests in Turkey. And the two we are looking at are IHH Healthcare and Malaysia Airports. So the question that needs to be asked is, after the knee-jerk reaction, which company actually comes out better? Which of the two has the biggest exposure and which of the two has better long-term prospects? So let's take a look. IHH Healthcare provides healthcare and has over 10,000 beds in 49 hospitals across 9 countries. Khazanah National is a major shareholder and the stock is dual listed in Malaysia and Singapore. IHH's share price took a battering during the lira rout. Turkey is one of its key markets because it owns a 60% stake in Turkish healthcare group Acibadem Holdings, which accounts for 1/3 of earnings. So a weakened lira means more Turkish currency is needed to convert to ringgit, so the forex translation could prove very painful come earnings time. On Tuesday, IHH's share price closed at a 52-week low of 5 ringgit 41, and this morning was trading at 5 ringgit 47, not that much up. But if you're looking on a 6-month basis, the stock is actually down around 9%. In a word, Fortis. IHH has been chasing Fortis for what it seems like the longest time, from a non-binding offer to counter-offers from other interested parties. In a way, you have to admire IHH's tenacity and the 2.35 billion ringgit offer it finally made. But finally this week, Fortis' shareholders threw their support behind IHH's takeover. 99.7% voted in favour of the deal. Fortis is India's second largest hospital chain and would propel IHH to become a leading pan-Indian hospital operator. Analysts are still positive on IHH, and some say the recent share price weakness allows for some buying opportunity for the long term. The highest target price that you can see is 7 ringgit 10. The floor is 5 ringgit 10. So MAHB is the country's main airport operator. It has a network of 39 airports comprising 5 international airports, 16 domestic airports and 18 short takeoff and landing ports. Its share price also not spared during the lira rout, and this was after it had closed at a 12-month high of 9 ringgit 86 last Friday. So MAHB owns 100% of Istanbul Sabiha Gökçen International Airport, and that actually contributed 23% to overall revenue in FY17. Less than what IHH gets from its Turkish ops, but still not a small amount. This morning, the stock did manage to recover and was about the same as how it started the week, around 9 ringgit 35, but that's still 5% off the recorded high last Friday. Saying that, it is still higher than it was 6 months ago, where the stock was trading around the 8 ringgit 57 mark. The issue with the lira crisis is how long it's going to last. Although Turkey has received a promise of $15 billion from Qatar in terms of investment, if it lingers, it's more uncertainty. The thing is, there was a report early this month that Turkish Airlines was possibly looking to buy a stake in Sabiha Gökçen for about 3.5 billion ringgit. Of course, nothing has been confirmed at the time, but a stake sale would mean a realization of the investment. On an operations point of view, July passenger traffic grew 2.2% to a total of 8.6 million passengers. MIDF research believes that the strong momentum in traffic will continue. MAHB also recently called for tenders for 14 concessions at KLIA, which will help to enhance its offerings and improve the experience for customers. The majority of analysts still buy on MAHB. Highest target price is 12 ringgit 20, lowest target price is 8 ringgit 60.